quite a mixed picture that we're seeing in the Asian markets.
Slowdown in certain areas. That has been significant. That is getting, that is outweighed by the kind of positives that we are getting.
On the upside, the 40 hourly exponential is 24,487.
But I'm not ruling an intraday bounce because we have corrected close to 8%. Last 4 weeks, we've been on the losing end.
24,285. Good to see some green straight off the bat.
That the capex in the first half was slightly weaker than expected.
We expect the stress to continue in Q3 as well.
Far out into the future, the margin territories will look very, very solid.
And it's turning out to be a solid Monday morning.
The credit demand was quite good, much better than we anticipated.
250-point uptick on the Nifty, very close to the day's high.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that's the day so far, and it is turning out to be a very good, steady, in the green, no flip-flop kind of a day. So 200 points, 24,400 nearly on the Nifty. The Nifty Bank is trading with about a 1% gain as well. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Rima and Surupi here in the studios, and Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon. It's a very broad-based kind of an up move today. So in the morning, you just thought banks will do the heavy lifting in the rebound, but now you've got the metals up, 2.5%, pharma's up more than 1%, IT's contributing. So very, very broad-based in the recovery.
And I think there's something festive finally that's in the air. A little bit of that spark has come in from earnings, which have been fairly all right. I mean, look at BHEL, case in point. Look at the stock go, because the expectation was that it will be a little subdued on the EBITDA front. I mean, it's a top-down beat, absolutely, right from the revenue onwards. But I think the EBITDA line is what the market is really, really liking. That is what we're talking about. Versus expectations of a loss, they've done a 274 crore rupee EBITDA. So we'll just get our research colleagues in to explain that. But it's not just BHEL. I mean, today, a lot of results, the market has chosen to go with optimism rather than pessimism. DLF would be case in point that, second quarter was a bit sluggish in terms of fresh launches, etc. But the market's kind of moving on. It's choosing to buy the dip. And that's a very different sentiment than the week that we were in last time around. Right now, the mid-cap index is absolutely in step with the Nifty and the Bank Nifty. All the indices up 1%. Nigel?
Well, Surbhi, I'll tell you what, that's the point, right? The markets are choosing to look at more good than bad today. And a perfect example is IDFC First Bank. Take a look at that stock. I remember in pre-open, we were talking about the stock being down 8-9%. It's now in the green. Take a look at Interglobe Aviation. The stock was down, 13-14% earlier? That as well as cut its losses out there. So it's that sort of a day. And these earnings surprises, Ambuja Cements, the numbers are quite good. You had, BHEL that you were talking about as well. So a couple of these earnings surprises, that's what changed the mood. And at least as of now, we've got 60 minutes to go. But the volumes are fairly decent. It's not that we're getting into a holiday season, so that's why volumes are less. Volumes are at par, and we're moving higher on rather good volumes. So I like the look of it on the screen. I think in the near term, the bulls will be happy to defend that 24,000 odd mark. Not out of the woods, but a good fight back is what we have seen in today's trading session.
Let me ask Prashant. Prashant, what do you think? Is this Diwali sentiment showing up? Or is this maybe, mid-caps maybe we've turned a corner after consistent drubbing and selling for the last 4 weeks, right?
I was saying this on Thursday and Friday that maybe the bulk of that FI selling is done. Let's get the institutional number today in the evening. If it's on, I think Friday was minus 3,000 crores. Yeah. It was much lesser. But, if that kind of abates, then I think, you get a little bit of himmat, as they say, locals also, because foreigners are not selling. And so I think that is necessary, a little bit of stability. And once, you get some sort of a bottom, then market can spend some time sideways doing, I think we'll all welcome some boring sideways action for some time, no problem. But that stability has to be found first, that the fall is done. And maybe, who knows, we'll see. But I think today's number, in that sense, will be a bit of an indication. Just a couple of more points. So the Nifty is also getting into again, you got to take it day to day. So some of the intraday technical levels, etc., are important. The Nifty is getting to its 40 Hourly exponential average, I think we're about 70, 80 points away. So that is one. Nifty Bank, by the way, at the day's highest point, hit the 20-day moving average. The Nifty Bank. Actually, it crossed it. And now it, of course, is under it. So let's see. That number is 51,571 as of now. And look at what's happening with PSU banks. Actually, that's one sector which from the beginning, when very small PSU banks were reporting earnings, and now names like PNB, etc., have reported, they've all positively surprised. So the PSU bank index itself is up 4%, and then you got the metals index, which is higher and stronger as well. So, we've kind of stopped talking about China, but if the NPC is down the corner. Global investors have not stopped talking about China because it's kind of coinciding with just around when you will get the US election results around the 5th of November. I mean, that 4th to 8th, I think, is when the China NPC is, and we'll get a real big number. That's a hope in terms of what they're prepared to do on the fiscal front. So, metals perhaps a little excited out there as well. Prima.
Well, Sun Pharma's Q2 numbers are up for you on your screen. On the top line, it's in line with street expectations, but bottom line at 3,040 has come in ahead of the CNBC-TV18 poll of 2,900. So at the bottom line, we're looking at a growth of nearly 19% versus estimates of about 13%. But the top line at 13,300 appears to be in line. The stock isn't incrementally reacting. It's been higher since morning, at least in the second half of the trading session, and still pretty much there, with a gain of close to about 2.1%. Talking about PSU banks, Indian Bank is the one which just came out with numbers a while back, and it was a super set of numbers, and the stock is also higher by close to about 10 to 11%. We've seen a deposit growth of about 8.2%. Advances have gone up by 8.3%. The company's slippages, I think that's one of the key factors. Slippages are down 30% on a quarter-on-quarter basis, and Indian Bank is positively reacting to that decline in slippages and the improvement in asset quality.
Yes, absolutely. So lots of numbers. And by the way, this earnings season is going to be remembered. I don't think we've had a quarter like this in the past where we're getting outsized earnings reactions, both on the way up and the way down. And it's been consistent from IndusInd Bank to today, all the big names to a BHEL. It's really been all over the place and massive reactions coming in on lots of stocks. So what should we be doing? What's the strategy for the last 1 hour? We have Mitesh Thakkar joining in. Mitesh, there's an open playground out there, right? Stocks are either falling 9-10% or rallying 12-13%. Look at BHEL go right now. Sun Pharma numbers are flashing on the screen. What are the calls you'll go with now?
Yeah. So, one, I think, the market has managed to hold on to the trendline support, and we've also cleared the first, we've kind of tested the first hurdle, which is around 24,450. And then, there's a chance of us heading towards 24,750. So I still believe that this bounce back mode should be on. Bounce backs can be slightly choppy, so I think that can play out. But I think I said this in the morning as well. As long as we are holding on to Friday's low, I think we have a good chance of heading towards 24,750, give and take 30-40 points in there. I think those levels before we start, getting into a declining mode again. And that is something which we'll assess once we reach those levels. Having said that, I have a buy on Piramal Enterprises, PEL Limited. That's a buy with a stop below levels of 1,056 and a target of around 1120 can be looked at. And BHEL, I think you were just discussing the stock, a very strong reversal with volumes over here. So buy with a stop below 230. It's actually circuit up, so maybe you'll not be able to buy it in the spot market. Try the options route. And 230 in the spot should be stop loss, and the target should be around 255.
Okay, thank you very much for that. By the way, the BEL conference call is also underway and the stock is positively reacting. The company is saying they're confident FY26 growth will be more than FY25, which is expected to be 15%. They're expecting big orders in the next few weeks from the Ministry of Defense, medical aims, DPSUs, and the stock, which was in the red, down 1.5-2%, is now back in the green. But let's talk about Motilal Oswal Financial Services. They reported a strong set of Q2 numbers. The company's revenue surged 23%. Margins expanded 400 basis points sequentially. To talk about the way forward, Ramdev Agrawal, Chairman, co-founder of Motilal Oswal Financial Services, is with us on the show. Thank you very much for joining in. Numbers have been strong so far. So for the full year, what is the kind of growth that you're targeting? Which business is expected to drive this? And are you expecting any kind of impact from SEBI's stricter F&O regulations?
Yeah. So our Q2 has been very strong. I mean, the top line has been, operating top line has been up by almost 46%, and the bottom line has been up by 53%. Can you hear me?
Yes, we can hear you. Go ahead, Ramdev.
Yeah. So the operating performance has been fantastic, and it has been strongest. Even sequentially, it is up almost 25%. So I think operating side, it has been growing at about 50%. So that has been the part of the current strength in the capital markets. But I think the real big number is coming from the treasury, which has gone up by almost, in this quarter we have done about 700 crores plus as a mark-to-market gain, and that takes the total to about 1242. That too after writing off 84 crores for the increase in taxation. So actually for the quarter the profit could have been about almost 1325 crores. So I think all in all it's an all-round very strong performance in the operating side as well as on the treasury side.
So Ramdev, hi, good afternoon. So this is the sort of holdings, unlisted holdings on the books. So the revaluation of that.
Yes, I mean this thing, Motilal Oswal has a very strong treasury book, and all the treasury is invested in equity products, listed as well as unlisted.
Right.
So it is the appreciation in those products which is the treasury gain, for the quarter.
And operationally, if you can give us a sense across business lines, what has been operating profit growth, broking and
operating
investment
profit
banking
growth year on year is about 53%. Yeah, so all of them, whether it is broking, investment banking, wealth management, capital markets, all 4 or 5 of them, asset management, all of them they have grown by almost 50% or over 50%. Only housing finance, in terms of they have done well, but in terms of profit growth, it is just about 10-12%. So rest all the businesses have, capital market businesses have done very well, and that's what takes the entire profit to, top line goes to about 46% and bottom line goes to be about 53%.
Ramdev, hi, good afternoon. Great to be speaking with you. And, the numbers are really showing up and they reflect the optimism that you have on the capital markets theme overall, right? So the business now, I'm looking at the EBITDA margin figure in front of me. Overall, the business is now running at almost a 63-64% margin at a blended level across all businesses. So steady state, if you leave aside the kind of superlative treasury performance, steady state, what is the growth run rate that you see ahead? Say, next 1-2 years at a top line level and also at a, at an earnings level, the net income level. Will the business keep growing at this rate? What could be rough ranges that we can work with?
Yeah, so if you see our last 10 years performance, I cannot say anything about the next 10 years, but last 10 years performance has been about 25% top line growth and 25% bottom line growth. In fact, bottom line growth is more like 40-42%. So I would think that now since margin is optimized, if the top line growth is 25%, we expect about 25% kind of a growth rate, but it doesn't happen in a straight line. Capital market buoyancy is very strong. So last 2-3 years, if you see, they are running at 35-40%. So it all depends how the market shape up. Every month, the industry is getting about 4 million customers. And I believe that from current 175, 180 million customers, we are headed to 300 million customers in next 3, 4, 5 years. If that were to happen, then all the businesses they will not find difficult to grow at about 25%. But it's all dependent on how the markets behave, how the clients behave.
So 25% top line growth and this margin of almost 60%, 65%. Is this also sustainable? I'm talking from a 1-2 year basis. Quarterly variations can happen depending on the market, but sort of from a medium-term perspective.
Yeah, so these margins have also got kind of bumped up because of the large treasury gains. So if you remove that, then the net margin and EBITDA margins will be somewhat more moderate, more like 40-45%. So the business margin that is definitely going to continue. We have very strong pipeline of business, whether it is issuances, whether it is wealth management, asset management, you name the business, and there is a very good traction right now. So I don't have any problem. I mean, and we have an operating leverage. So actually, if you see, our employee growth is almost at 46%. So clearly, we are building the team big time, and that is where we are not taking the operating margin, operating leverage of the employee cost. So as we go forward, there is a lot of leverage built as we go along, and we are buying a lot of new offices. We are recruiting people at a very senior levels. So we are responding to the market need, because market is just expanding, and the market is saying, give me more bankers, give me more wealth managers, give me more asset managers. So that's what we are trying to fulfill. So this is a very strong tailwinded business we are in right now, and we are trying to do our best in terms of responding to that situation.
Hi, Mr. Agarwal. Good afternoon and good to see you. Help us out with your targets for the home finance business. What is the AUM disbursals that you're looking at in terms of targets? And I'm just looking at it, it appears the yields have come off a little bit and spreads have got a little bit compressed. What's the outlook in terms of growth, in terms of profitability?
Yeah, so this is the first year when our AUM will seriously start growing. From 4,000 odd we closed last year, it is going to close at about 5,000, 4.5 or 4.8 or 5,000 crores in the first year under the new team. And then from there, they will keep growing at an industry rate or a little ahead of that, more like 20%, 25% kind of AUM growth. But what is happening is, there the margin expansion is not happening at this juncture, because we are expanding the team very rapidly. And hence the employee cost is growing at a rapid pace, and that is not allowing the profits to grow. So that's the only place where the on a higher top line growth or AUM growth, I'll have a lower profit growth. Yes, but still will have a profit growth, and my ROE from that business also will go up from say 10% to 12-13%.
You know, the other thing, Surabhi, is that Motilal results are great, but Motilal is also the firm has handed out ESOPs to employees, and I mean, so employees have made a lot of wealth.
Yeah.
I was just looking at the stock; it's gone up 6 times in the last 15 months.
Wow,
That's times,
serious wealth generation.
Ramji, so you got smiles all around. I think I can take it that in the office, and but so let's just consider the scenario that, because you are dependent on the markets, right? Some of the exchanges that we speak to say that because of these F&O regulations, etc., starting November 20th, it'll all come in a phased manner. It will come. Now, they may be exaggerating, we don't know, they also don't know. But their view is number of volumes can fall, anything upwards of 50% overall. That is what they are saying. So I don't know, I mean, if that were to materialize, what would the impact on the broking capital market side be, in your opinion?
Yeah, so we have tried to do a best guesstimate possible at our end, and since ours is a slightly different model, F&O, we have a cash volume which is larger revenue gathering than the F&O. So we get about of the total capital markets business or broking business, we get 60% from the cash volume and 40% from options. So now, if the cash volumes are not impacted and option volumes go down by 20-30% or maybe 1/3, so our total impact could be say 30% on 40%. So anywhere between 10 to 15, 20% will definitely get shaved off for some time till market find new equilibrium. So we think that 10 to 15% revenue loss could be there, and that will have a very large impact. I mean, like out of that, say, if revenue goes down by 10% from broking, I mean 6-7% would be the loss of profit out there. But broking is only say about 55% of the total revenue. My non-broking revenues are 45%. That remains completely intact. And so the overall impact on the company could be of the order of 5-6% in terms of PAT.
So 10-15% revenue impact. So actually 10-15% impact on the broking revenues, but 6-7% impact on overall net earnings, profits. Okay, possible. That's also, of course, just in the possibility. Go on.
I just wanted to sort of round off by talking about the other business. We spoke about broking, and like you're saying, 40 to 45% is other businesses, including wealth management and private clients, private banking. It's sort of more of a thematic question. We speak to Ashish very, very frequently. I speak to him very frequently on the wealth management side. Now, the only concern is that isn't this getting to be a very crowded space from foreign banks to local institutions to renowned capital market companies like yourself? Everyone wants to get into wealth management. Everyone's looking for top tier talent. Everyone's going into tier 2, tier 3 cities. So is the pie large enough, or is there some fear of maybe a slowdown? At what clip, what is the rate of growth that you're projecting for your wealth management business?
See, Surabhi, this is a very, very seriously large opportunity in the sense that we are talking about, say, right now, wealth base on a $4 trillion GDP, wealth base might be, say, 2 times of GDP. So that is about 8 trillion or 10 trillion. Now, when GDP goes from 4 trillion to 8 trillion, your wealth base will not go 3x. It will go to more like $25-30 trillion. So there will be a lot for everybody to manage. And it's not winner takes it all in the sense that you cannot have some 50-60% market share in a business. So it's a very large business. It's a very physical in the sense that you have to meet one-on-one. Of course, you use a lot of technology. But it's a business which requires a lot of client interaction, and it's a long-term relationship business. So there is a lot of business in the market. It all depends on our competence and our ability to conduct how much we can do it. And that is the story of every aspect of capital market, whether it is broking, whether it is asset management, wealth management, private equity, you name it. And everywhere there is an expansion is going to be sustained. I mean, and it's not 1 or 2 years; it's a decadal opportunity. So so it's a very transformative for the nation. It's a very large business, so we are very bullish on that, and everybody will try to get its 2% share, 3% share, and it's not about the share or availability of business. It's all about how much you can manage.
Yeah, it's a large opportunity, a big pie, I guess, like you're saying. Got it, sir. Thank you very much for joining in and giving us perspective on the business this quarter. And once again, season's greetings. Wish you a very happy Diwali to you, your family, and everybody back in your office as well. Thank you for joining in. There you have it. That's the latest from Motilal Oswal. Guys, I mean, what Mr. Ramdev was saying on wealth management, because I talked to wealth managers from private banks to public sector banks to foreign banks to individual, boutique firms. Everybody is sharing the same kind of, optimism, setting up offices in tier 2, tier 3. Someone's talking about getting clients from Patna. Someone's talking about, Bhubaneswar. There's wealth in the kind of pockets that we can't even imagine in this country.
Oh, absolutely. And the wealth managers are going and getting it out.
Getting it all out.
Put it into equities. Well, I think we'll take a quick commercial break here. Rajesh Kothari from Alpha Accurate Advisors will be with us on the other side. Stay with us. Coming back in just a second.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC-TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC-TV18.
Welcome back. Okay, lots of earnings to go over. And the big story of the day, of course, has been banks and NBFCs. Abhishek is here. He's drawing up how the big private sector banks have scored in the second quarter. Abhishek.
Well, in terms of, the performance of large private banks, ICICI Bank has been an outlier and it has outperformed peers on various parameters. So if you take a look, the loan growth at sequential loan growth of about 4.4% is perhaps the best that you are seeing amongst peers as well. HDFC Bank, Axis Bank and Kotak Mahindra Bank as well. In terms of deposit, a strong deposit flow of 5% growth on a sequential basis. Next best to HDFC Bank at 5.1%, so not far away. Now, X of Treasury, the core operating profit growth of ICICI Bank at about 4.1% sequential is perhaps the best that you are seeing amongst peers. For other comparison, if you take a look, Axis Bank had seen a decline as well, and HDFC Bank and Kotak Mahindra Bank grew anywhere between 3.2 to 3.6%. Now, improvement in quarterly annualized slippage ratio has been massive for ICICI Bank at 35 basis points sequential improvement that you are seeing over there, 1.6% versus 1.9% in the previous quarter. Now, for HDFC Bank, it had increased. Even for Axis Bank, it has declined. But for Kotak Mahindra Bank, it increased massively. Asset quality improvement, that is the gross NPA ratio, is the highest for ICICI Bank when compared to other peers like HDFC Bank, Axis Bank and Kotak Mahindra Bank. The gross NPA ratio for ICICI Bank has improved by 18 basis points, while for peers, it's improved anywhere between, it's actually deteriorated for HDFC Bank and for Kotak as well, while it improved by 10 basis points for Axis Bank. Now, risk weight asset to advances ratio, which shows the risk in the balance sheet, that's declined the most for ICICI Bank, suggesting that the risk in the balance sheet has come down. Net interest margin has moderated for all lenders as cost of funds have inched up for banking sector as a whole. However, net interest margin decline is 9 basis points on a sequential basis for ICICI Bank when compared to 11 basis point decline that you have seen for Kotak Mahindra Bank. Large lenders, most of them have seen improvement in their return on asset. So ICICI Bank has also seen improvement in its return on asset to 2.4% versus 2.36% in the previous quarter. Back to you.
Okay, this quarter we've really seen, sort of a separation of the men from the boys. ICICI Bank and HDFC leading on most of the charts. But Abhishek, you've also done a comparison from some of the key NBFCs. What stands out?
Well, I've compared two more predominantly CV players, that is Shriram Finance as well as Cholamandalam. So it's a Shriram versus Cholamandalam, wherein Shriram has actually outperformed Chola on various parameters. So if you take a look, asset quality of Shriram Finance has actually improved by 7 basis points in terms of gross NPA ratio on a sequential basis, while it's actually deteriorated for Cholamandalam by almost 16 basis points on a sequential basis. So in absolute value, gross NPA has increased 14.2% quarter-on-quarter. Net NPA has increased about 16% quarter-on-quarter for Chola, while that for Shriram, the increase is only 3% quarter-on-quarter for gross NPA, while only 1.7% quarter-on-quarter increase for its net NPA. Now, Shriram saw better disbursements growth as well. For Chola, the disbursements have actually declined marginally on a sequential basis, while that for Shriram, it's actually grown by 6% on a sequential basis. So, AUM growth was 4% quarter-on-quarter for Shriram, while that for Chola was about 5.9%. So despite the fact that disbursements declined, it looks like the tenure of the loans have increased for Chola, which led to AUM growth being very robust. In terms of valuation, 1 year forward price to book value, that is FY26, Chola is trading at 3.7 times, while Shriram is trading a little under 2x. Back to you.
Okay, all right, Abhishek, thanks a lot for that. Well, let's focus on Ambuja Cements. The numbers were strong, but maybe not as strong as what it looked like earlier. Now, in terms of revenues, it was much better. The EBITDA number as well was much better, and the profitability number as well was much better. There are 4 big factors that played out for Ambuja Cements. So look at the standalone numbers, because we already have ACC's numbers that comes in the consolidated entity. On the volume front, it grew by close to around 14.5%. Now, that's much better if you compare it with any cement company. Even Ultratech delivered a growth of only around 3%, so that seems to be good. It appears that Pennar acquisition could have come into play, and that's why for a month or so, they could have got the benefit of those volumes. That is the assumption, so some inorganic volumes could have come in there. The second factor is realizations were flat quarter-on-quarter. Most on the street were expecting a decline of around 3 to around 3.5%. So that's good as well. Now, because the operating leverage played out and the company has been making measures such that the costs come down, so the operating leverage has aided in the lower costs. Power and fuel cost is down by close to 17%. Other expenditures are only 2% when you have a volume growth of mid-teens. That's phenomenal. That's what's resulted in the EBITDA per ton actually coming in at around 784 rupees per ton, which is much better than what the street was working with of around 550 rupees. However, there were incentives that they have accounted for. So adjusted for that, it's still a beat. It comes in around 635 rupees per ton. So most of the EBITDA beat, or close to 50%, is because of this 138 crores that they've got for their West Bengal unit. And that explains why it was a bigger beat. First look at it, it appeared a massive beat. It's still a beat, but not as big as earlier envisaged. By the way, take a look at the markets. We have slipped in the last few minutes. In fact, we have come off close to around 60 points, and that's happened rather rapidly. The Nifty Bank is down close to around 300 points from the high of the day. BEL has slipped a little bit. Infosys is another stock that's down close to around 0.5% on the verge of moving into the red. So some kind of nervousness towards the end of the trading session, guys.
All right, Nigel, thanks very much for that. No, absolutely. And, keep an eye on some of these names. Markets coming off, right? We had 200 points, just about 150, 160 odd left on the table. Look at BHEL. That's also taken a sharp dive. It just reported numbers. Stock was up 10. It's lost 5% from the highs. So about 228. So that's sharp come down at this point in time. And of course, the big story which is playing out is this dip that we've seen in oil prices. And I think that is perhaps accentuated a little bit more. Almost about a 5.5–6% cut as far as oil prices go. Oil marketing is not reacting, has been like that. I mean, 1%, 2%, 3% in that range of three oil marketing companies. But lots of consuming sectors are indeed doing better and doing well. We'll take a quick commercial break. There you go. That's what I'm talking about. So near 6% cut. Don't see that very often. But that is what you have. So in the morning when we came in, it was about a 4% drop, and that's now extended to by another 2%. Take that break, but just a quick programming note, and this is, be prepared to ring in festivities as Diwali. Tune into CNBC-TV18 at 3 p.m. tomorrow to hear out from some of the next-gen voices on markets and what to do with your portfolio and how to sort of prosper going into summer 2081. So those are the faces you will see. Stay with us. We're back.
Welcome back. A few stocks actually are slipping as we speak. You have BEL that's moved into the red. Karnataka Bank as well has slipped a little bit. But on the flip side, First Source is building onto those gains and Canara Bank flying away. That's up close to around 7% as we speak. Midesh Thakkar is back with us. Midesh, first a word on the index. You have been sounding a little bit cautious even on this bounce. You're not entirely convinced. If you had a long position, what would you do? Would you book it out before the end of today? And what are the levels you're looking at on the Nifty? And fill us in with your picks as well.
I think, Nigel, a good way would be to take some profits off, but not all. Let's say about 40%.
Okay.
The chance of bounce back are still very good because of the the overall oversold levels of on most of the indicators. So we'll play it that way. Though I think Friday's low still remains the deep stop loss. But the idea is that yes, bounce backs are choppy. So taking profits on every move in your favor would be a good idea. And that's the way we'll approach it. On the stock side, I have a BTST on Ramco Cement. The overall pattern is good. It's slightly come off the day's high with the markets, but I think here a BTST with a stop below 849 can be taken for targets of around 866, 867 on the upside for tomorrow. And the other one which I have a call is STBT on Page Industries with a stop at about 42,620 and a target of around 42,100.
Okay, thank you very much for that. Let's talk about DLF. So in the morning, we thought DLF has reported a weak set of numbers. Their bookings are under pressure, but the stock is doing very, very well today. So we've got some bullish notes from brokerages. Sonal joins in with the details. Sonal.
Well, yes, it was a weak set from DLF. Bookings were at a 17-quarter low. However, brokerages, they are bullish on the outlook going ahead because management has maintained their bookings guidance for FY25. Motilal Oswal says with the balance inventory of around 2,100 crore rupees, launches now will be the key to driving its pre-sales growth. In fact, they received approval for one of the most important projects that they have, the Dahlias, in the first week of October 2024 itself. And with this, the company is confident of achieving the pre-sales growth target of around 17,000 crore rupees in FY25 itself. For the rental business, which is DCCDL, they should achieve rental revenues of around 5,000 crore rupees. For the Mumbai project, the total potential saleable area can go beyond 5 million square feet, and this is something which will add more to its bookings number going forward. On the back of this, they have upgraded the stock to a buy with a revised target price of 925 rupees a share. Jefferies too is positive on the stock. They say the recent correction has brought down the NAV by around 20%, which is in line with the long-term average of the stock. This provides an attractive entry point for the stock, also considering the residential real estate cycle that we are in. They have raised the Dahlia's sales estimate to 5,000 crore rupees versus 3,000 crore earlier, and that is something which will aid bookings for the company going forward. The target price has been raised to 1,000 versus 985 earlier. They also have a buy rating on the stock, so brokerage is bullish on the stock because of the recent correction and the outlook going forward.
Indeed, thank you very much for that. First Source of stock that Nigel earlier alluded to is firing 12% higher. Remember, the company has raised the full year revenue guidance for the second consecutive quarter. For FY25, the company is now talking about a 19.5% to 20.5% revenue growth. Now, this includes 5% from an acquisition that the company did. But even if you strip that out, the organic revenue growth will be about 15% at the midpoint, which is higher than the 12.5% that the company was expecting 3 months back. Margin guidance largely retained at 11 to 11.5%. So the company is very, very confident. We spoke to the management. Even the outlook is upbeat. They're gaining market share. I mean, they're gaining more wallet share from customers. Their deal wins are very strong. Even in the current quarter in December, they're talking about 3 or more large deal wins. But watch for Bharti Airtel. That's the one which reports numbers post-market hours today. And Bharti Airtel is a stock which has done very well. It's up 60% from the start of the year. Now, expect a strong quarter for Bharti Airtel. The key reason is the India wireless business, which is 60% of the company's overall revenues and EBITDA. The India wireless business undertook tariff hikes. The tariff hikes were approximately 15%. It took place in early July. So there's a full flow through of the tariff hike, and this will boost the company's revenues. So on a consolidated basis, 6% top line growth, but the India business will see a 10% revenue growth. There will be a margin expansion, there will be a profit jump, and even the company's ARPUs, the average revenue per user, will see a flow-through impact of this pass-through, according to our poll, up nearly about 10%. We saw that in the case of Jio also, a very good quarter, a strong quarter driven by the tariff hikes. Subscriber numbers, though, could remain a bit muted. as the increase in tariff hurts some of the lower-end subscribers. Some of them may choose to give up their second SIM. So Bharti Airtel should be a stock on your radar. But let's talk about Sun Pharma. That's the one which reported numbers about 2:30. Vinny?
Yes, so talking about Sun Pharma in terms of numbers, it was an inline set of numbers that came in from the company. Revenue growth of 9%, EBITDA margins coming in at 29.6% versus a 21.6%. So year-on-year basis, a sharp uptick in terms of the EBITDA margins, but versus estimates, it's in line with what we were expecting. Profits, that's where the beat came in, and profits came in around 3,040 crores versus around 2,557 crores last year, an uptick of around 19%. What led to this profit beat was because the forex gain, there's a forex gain of 128 crores during the quarter versus last year there was a forex loss of 34 crores. Other than that, key triggers, US sales, that was better than what one was expecting. US formulation sales came in at $517 million, whereas we were expecting around a $480 million in terms of US formulation sales. A global specialty side business, that also has done well. We were expecting a growth of around 15-16% in terms of revenue. It came in at 19.2%. So yes, growth was better there, and that leads to better margins because this global specialty business, that's higher margin business, and that is why a slight bit of an uptick leading and aided mainly by this global specialty business. Other than that, emerging markets saw a muted growth of around 3%. Rest of the world saw a bit of a decline of around 3.5%. India, though, managed to see a growth of 11%, so in line with what the street was expecting. Research and development expense, keep an eye out on that because that is 6% of the total revenue. The company had given a guidance for FY25 of 8 to 10% of the spending. So that is something that we'll watch out for in terms of clarity. But all in all, an inline set of numbers.
All right, thanks a lot for that, Vinny. By the way, I just wanted to make one quick point. First Source is flying away. There's a holding company, which is RPSG Ventures. I recall we had presented a piece on the entire group, Sanjeev Goenka group. And this is the holding company. So the market cap is just around 3,500 crores. But it has 53% stake in First Source. And First Source's market cap is close to more than 25,000 crores odd. So, it appears that holding company discount is playing out here. First Source is flying away. And that's why the company, that's the promoter entity, which is RPSG Ventures, that as well is up close to around 6% or thereabouts. Sudeep Bandyopadhyay is with us. Hi, Sudeep. Good afternoon. Good to see you in. Which was that one result that really impressed you and you would be looking to add on to positions?
Well, I think one result, Nigel, which really impressed me pleasantly is BHEL. I have always been a critic of this company and I have been absolutely scathing in my remarks about the performance. And consistently over many, many quarters, many, many years, they have disappointed the investors, analysts, and pretty much the market because of underperformance vis-a-vis expectations. This is one quarter where I think they have, really, beaten all of the expectations. I think it's a very, very well taken. I'm excited probably because I was a naysayer as far as their performance is concerned, and this performance has come as a welcome relief. There was no dearth of orders with what is happening in the power sector. They were getting orders by the dozens, and the order book was swelling, but the performance was continuing to be poor. Even this quarter, the expectation was of a negative EBITDA, whereas they have turned out a very, very positive, performance. And it's heartening to see finally the company coming back and delivering good set of numbers.
Okay, well, yeah, indeed, BHEL has come out with a very pleasant and positive surprise today. As we are down to the last 10 minutes of trade, mid-cap index is retaining a bulk of that gain, about still 0.8% higher. You have a lot of names like Indian Bank, for instance, 11% on the higher side. Motilal, we just had the conversation with Mr. Ramdev Agarwal. Stocks retaining a bulk of that. Optimism as well. And Vodafone Idea is up about 8%. Sudeep, very quickly, today's listing, Wari, it's managed some green and, the IPO was very well subscribed. But the question is now, stock's trading at around 2,300. Would it make sense to enter even now if you didn't participate in the IPO? The narrative is all positive. The question is on pricing and how much can you hope to make from these levels?
Well, if you're a little aggressive investor and if you have a slightly longer time horizon, I don't see much challenge in acquiring even now. But you have to give it time. It's not that it's going to fly, immediately. Fundamentally, the sector, everything is good. except the price at which it is now available. But if you are a long-term investor, you can look at it. On the other hand, you can also take a strategy, keep watching. If there are some corrections in the market and there is a correction in the counter, you can look at acquiring then as well. But timing the market is always difficult. So if you believe in the sector, if you believe in the growth story which is happening, and you are keen to buy this, by all means, go ahead and buy. Maybe buy in lots. Don't buy everything together, but be prepared to hold it for a long term.
Another company where we've seen a guidance increase is Inox Wind. Came out with numbers over the weekend. The EBITDA margin guidance was raised from 15 to 17% plus for the full year. Sudeep, do stay on. Need to get into a break. But as CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You don't want to miss this.
Welcome back. Okay, so that's the same story, I think, repeating itself. We're talking oil marketing companies. You're seeing the major slip up on expectations from IOC in the second quarter. The profit number is way below the pole. It's exactly what we've seen happen with HPCL and BPCL as well. And the reason is, of course, inventory losses. The stock is reacting negatively. It's now slipped into the red. Yeah, look at that. Just about 3,700 crores of EBITDA versus expectations of about 1,100. So inventory losses, what I'm guessing, has hurt IOC as well, much like its peers. But the question is, oil prices are also cooling off in a very dramatic fashion. Let's get Brent on the screen. When Prashant checked it last, I think the price was down 5%. That's been the intraday decline on Brent. So you've got, make that almost 6% now on Brent. It's a sort of a crazy fall in our oil prices today. Sudeep, come in on this. I'll make this our last question for the day. OMCs, it's hard to guess which way this is moving from inventory gain to loss and what's happening with pricing, etc. What would you do? Oil marketing stocks?
I always have been maintaining this is for really investors with an iron will, because the volatility in oil marketing companies is too much. The entire oil sector is too much. Number one, you have the global oil prices which keep fluctuating, and they are seesawing in a big way. Then you have the refining margin, which again is a factor of multiple things, and that also keep seesawing. The third and final factor is this, the oil price in the bunk, and that is controlled, that is managed, and there is a question of under recovery, over recovery. So there are too many variables which are not in anybody's control, and you have to be really lucky to really be getting it right as far as these companies are concerned. So it's, for trading maybe it's okay, but for investment I'm not so sure, unless you have a very long-term horizon in mind. If you have a shorter term horizon in mind, these are not stocks where you can invest money and sleep peacefully.
Okay, all right. Sudeep, we'll leave it on that note for today. Thanks for joining in. Let's quickly recap. A day that's finally seen some green on the screen. After 5 consecutive days of fall, at least the 6th day, we've got a bit of a gain, 177 points higher on the Nifty, and almost an equal amount of gain coming in for the mid-cap index. It was really banks leading from the front. So if you look at the Nifty, it's financials that are leading the charge. Sriram Finance, 5.5% higher. ICICI Bank, 3%. You have names like SBI also chipping in. There is actually HDFC Bank didn't quite participate. That was playing a bit of a spoil sport. So those are some of the major financial names. Other than that, Adani Enterprises, 4%. Wipro, JSW Steel, these are stocks on the higher side, even Tata Steel for that matter. So some of the metal names are shining well today, and some buying coming back to autos, which have been beaten down very hard. So M&M, Eicher, Tata Motors, some of these stocks had a little bit of green on them. The bell has gone. The downside comes in the form of Coal India, disappointing Q2 performance. Bajaj Auto was lower. And the banks that didn't go on the green side today include Axis Bank and Kotak Mahindra Bank. So those two were the disappointing names, but not a bad day for mid-caps today.
The mid-cap index up nearly 1%, strong advance decline ratio, 1750 stocks advancing for about 800 stocks declining. Vari Energies, the new IPO, strong listing. The stock ends with a gain of 56%. And then you had a whole host of banks, so Indian Bank, Bandhan Bank, financials in general. So Poonawalla FinCorp, where there was a loss, but the stock closed up with a gain of 8%. Canara Bank, Yes Bank, all moving up. First Source, Arvind, BHEL are some of the other stocks reacting to their numbers. On the way down, I think Interglobe Aviation is a stock that deserves mention. The first loss in 7 quarters, and softness seen in names like an SBI Cards, Indian Hotels, CMS Info, Z Media too, BEL too. Add that to that list, reacting to numbers, and IOC.
No, absolutely, and lots and lots of individual large movers in terms of sort of specific stocks. So I'll just look at what was down. Look at something like a Craftsman Auto. It's come off sharply as a well-owned name. The high was 7,100 plus. Stocks under 5,000 rupees now in what 12, 13 trading sessions. Look at something like Action Construction Equipment. Again, pretty large sort of a sell-off from the highs. MGL sold off quite aggressively today. So no recovery. I mean, of course, big sell-off happened when the APM allocation was cut. There wasn't any recovery at all. The high was almost 2,000 rupees. Stocks at about 1,400 as of today's close. Voltamp Transformers is another one. Big cut from the highs, and very quickly the high I think was about almost 15,000 rupees. Stocks at about 10,000 now, 10,500. So it's a large sort of power transformer company. CG Power, Chola Finance, Indigo are some of the others which saw cuts coming in today. The two big movers on Friday, one is Dixon, which lost 10%. The other is Indocin, which was down 20%. Both saw some small minor recoveries. So 1.5% on Dixon, and Indocin ended about 1.25% in the green as well. It's about 1,054. So that's the market for you. But 1% gains, at least frontline indices. That's how we close it. Thank you very much for staying with us here on this edition of Closing Bell. From all of us here, it's goodbye. But stay with us because Reema and I are right here. We'll get you markets forward after a quick break.